What's up, guys? Welcome back to DCA. So, if you've been watching my channel lately, you would know that I have been rather bearish on the crypto market in the short term. And I've been bearish now for about a month or a month and a half. So, I've laid out extensively the reasons and the evidence behind my stance on the market. But what I want to do today is talk to you about a potential for a market reversal, how that may look and the fundamental reasons behind it. So we take the stance on this channel that no one knows how the market is going to react at any given point in time. But what you can do is prepare your portfolio accordingly. So, a lot of the way that we approach the market on this channel is simply by optimizing your portfolio in accordance with what is more likely to happen based on the scenario that you're presented with. And that's simply in my opinion, it's a sound way to approach any market, to approach any investment. So when we say that you're preparing your portfolio accordingly, what that means is, for instance, when we're below the 20-week and the 50-week moving average, we approach the market as a long-term investor accumulation phase. When we're above the 20-week moving average, setting new all-time highs, that's the time we want to be DCAing out of the market. We also take a look at the general market as a whole and determine that given when you're in a situation such as being below a 50-week moving average, in this case for crypto, that is historically a bearish time in the market. So what that means is we stop accumulating altcoins during that time, at least the smaller cap altcoins, because of the fact that, for the reasons we've been laying out, the altcoins tend to perform very poorly during these times when Bitcoin is below its 50-week moving average. So everything that we're doing is simply assessing the probability that the market will move in a particular direction and then adjusting our mentality first and foremost, adjusting our mentality and how we're approaching the market. Second of all, we're adjusting our portfolio in accordance with what the probabilities are telling us. Now, we're always acting with imperfect information. And what that means is just because we have evidence, we've gathered data, and it indicates to us that this has happened multiple times in the past, that does not assure us that it will happen again in the future. But what it does is it indicates to us human psychology, human behavior, because that's what we're looking at when we look at charts. We're simply looking at human behavior, and it's oftentimes predictable. That's one of the primary reasons why charts and technical analysis can have such a beneficial impact on your investment strategy. So anytime that we look at a chart, what we're really doing, and when we're identifying these patterns, and when we're looking at technical analysis, the patterns that form, and when we're identifying support and resistance levels, really what we're doing is studying human psychology and human behavior as it relates to markets. And this helps us to inform our future decisions. So what I want to do today is go over the chart for Bitcoin and identify a potential location for a market reversal, as well as a few variations of that potential market reversal. But not only that, you can't simply look at a chart pattern and know everything that's going on. And that's because of the fact that chart patterns, and as they relate to human psychology, don't form in a vacuum. Human psychology forms around the macroeconomic level picture as well. So you have to consider what's going on the outside. So we're going to look at the Bitcoin chart as well as analyze what's happening on the macro level scale and come up with some conclusions about what may happen from there. So if you guys like this type of content, you could head over to the Discord channel. We do a lot of macroeconomic level discussion of the cryptocurrency asset class there. You can also sign up for the DCA Index Risk Model. This is a machine learning algorithm model which helps you to identify market cycle peaks and bottoms. In other words, it helps identify where the asset is typically overbought and in need of a pullback, as well as oversold, and historically the best times to acquire the asset. So we have this for Bitcoin, Ethereum, and numerous top altcoins. We recently did a video on the Federal Reserve, or the Fed, the central bank of the United States. And we talked about why the policies of the Fed, in conjunction with COVID, have led to a situation where there's increasing inflation. The Fed is going to meet tomorrow. And I think a lot of the uncertainty you've seen in the last few weeks has been based on some of the statements that the Fed has made lately, namely that they are going to be pursuing a policy of quantitative tightening. And if you don't know what quantitative tightening is, I'll just quickly summarize it, and I'll leave a link in the description below, which will explain to you exactly what this is. We did a video just a few days on this. And, truly, I think this is one of the most important videos I've done because if you're an investor, you really should understand why the policies of the government, what they're doing and how it affects you as an investor. Because quite frankly, at the moment anyway, it's hands down the single biggest mover of the market. A lot of this uncertainty you've seen ever since, late November has been due to statements that the Fed have been making regarding quantitative tightening. So, what the Fed does, and I'm going to give just a very simplified explanation. Like I said, the Fed prints money or creates money, gives it to banks. Banks then lend to individuals and businesses and corporations, which stimulates the economy. The Fed also buys assets, such as risk assets. And what quantitative tightening is when they reverse this policy. So they're going to start getting the risk assets off of their balance sheet. And this is simply to help fight inflation. So they will raise interest rates to decrease lending because when there's all this money flowing around in the economy, it really raises the price of goods. So the reason that we've been seeing this withdrawal is because of concern that the Fed is going to be increasing the interest rates. What I want to discuss today is the fact that, first of all, let's just talk about what's likely to happen tomorrow. And based on several factors in the economy, which I won't get into because, quite frankly, it's beyond the scope of this conversation that we're having today, it does not look like the Fed is actually going to raise interest rates tomorrow. So, nor are they likely to start pursuing a, significantly more aggressive quantitative tightening policy. So these factors combined will, at minimum, be a shorter term bullish signal to the market. So let's talk about a few things then with that said. So Bitcoin is forming the chart pattern that everyone's talking about, which is this double top pattern. We've seen a single top here. We came down to this neckline. So, if you don't know what a double top is, there's a run up and then you basically form an M-shaped pattern. So you form a top and then a bottom and then a top and then you come back down to the bottom. And this is typically, supposedly anyway, a very bearish sign. However, this is typically a bearish sign in the setting of a bear market. So this is going to draw into question of whether we're in a bear market. So if you look at Google or Amazon, for instance, you can find numerous double top patterns that fail over the last 10 years simply because the market in general has been in a upward trend. And so a bearish pattern is more likely to fail in the setting of an overall bull market. So I think, what we could see, we've basically seen this almost a perfect double top pattern. And typically when you come down to this trend line here, if you break below, then, the fear is that you will continue going down below. And for us, that may be at around $20,000. So this brings me to what I want to talk about. So we've been suggesting, and lots of places have been suggesting that institutions will be wanting to enter the market in 2022. And I do think I don't think, as I've been saying, I don't think institutions are interested in entering the market at $60,000 or even $50,000 or $40,000. And why would they? If if you're an institution, let's remember we said that these charts are nothing more than the manifestations of human psychology, especially the crypto market, since by and large, over a long period of time, it's been dominated by the retail market. So we have a very clear picture of how the retail market responds to certain situations. It's why we've had these repeatable parabolic FOMO phases. These are not institutional investors creating these peaks that you're seeing, here, here, and here. These are simply not institutional investors. The institutional type investors, the very high net worth investors, are the ones selling their Bitcoin to create these patterns here. Okay. Because, as we've showed many times, this is short term holders, FOMOing into the market. And, we have the on chain metrics and I've showed them many times. So I'm not going to go into it again right now. But these events occur, simply put, because of, retail investors. So what that means is if you are an institution and you're looking at Bitcoin and it's been around for over a decade now and it's been showing nothing but price appreciation, the number of individuals investing in it and the interest in it is clear to everyone essentially. So if you're an institution, you're going to want at least a small piece of the action. Okay. I don't think institutions are going, I don't think 2022 is going to see this place where, we see nothing but, institutions just completely dumping in and going all in into Bitcoin. I just don't think that's going to happen. But I do think you're going to see them testing the markets, and they're going to do it in positions that are advantageous to them. So when the price is up here at 60, 50, $40,000, that's not a good price to them because they have seen many times in the past what happens when we reach these peaks. And that is the fact that there are these large contractions. In fact, if we just take a look we'll go from market cycle peak down to their bottoms, we have seen an 86% correction and to here, an 83% correction. And right now, our largest correction was in June, or from May to June, and that was a 55% correction. So they know that if they simply bide their time, or even, based on the way that crypto is regulated or not regulated, there are certain ways that they can influence the market to enter into an advantageous position for them. And what we were seeing, I think we were seeing a microcosm of that happen right here when we got down to around $33,000. You saw certain wallets just acquiring mass levels of Bitcoin at, $32,000, up basically all day yesterday. So, what this means is that I think you're going to start to see institutions that are interested in getting into Bitcoin, if it's already gone through their board approval process, etc., because that's another thing people don't consider. These things are not just the kind of thing where, an institution goes, hey, we're going to buy Bitcoin today. It's, meetings and discussions and paperwork and, getting approval and making sure that they're conforming to regulations and, et cetera, et cetera. So these aren't just things that happen overnight. But presuming that they've went through these processes, they have set price targets where they want to get into the market. And I suspect that based on what they've seen in the past, it's likely going to be, somewhere approaching this white line down here at $31,000 all the way down to $20,000. And I think the, institutions are going to want to enter the market in those levels. And like I said, they're going to do it incrementally, and they're not going to be doing it on exchanges. Okay. So, you're not going to see the volume just spiking out of nowhere on exchanges because they'll be doing it over the counter. So you're not going to see some, just instant price reversal because, some institution is entering into the Bitcoin market. That just won't be how it works. It will be a lack of supply. And then as demand starts to pick up, which is another thing that we just don't have the demand side of the curve to match the supply side at the moment. But once the demand side meets this position that we're putting ourselves in of a diminished supply, then you will see the price start to go again. So, the entire point of what I'm saying is kind of what I'm expecting to see is us to potentially come back down to this level. And I actually think we will likely break below it. But I think it's going to be if the market is able to stay in an overall uptrend. And I'm talking about the general market, not just cryptocurrency, because cryptocurrency is in a defined downtrend right now. But if the general market is able to stay in an uptrend, I think you could see a reversal at some point down here in the high 20,000s, because it will be, you have to remember, like we said, the big time money, they know they can get short-term holders to capitulate. They can get retail market. They can get the retail market to capitulate. And that's another thing that we talk about on the channel all the time. You know, you have to remember you've essentially been profiled. You as a retail investor, you have been profiled. They know that there is X% chance that you will no longer be able to tolerate watching the loss happen in these situations. And the individuals who are able to exert control over the market will attempt to influence you in that way. So on my channel, what I'm trying to do for you guys is not just simply, you know, tell you what I think is going to happen, because that doesn't really matter. Those parts of my channel don't really matter, telling you what I think is going to happen. The parts that matter, in my opinion, are, attempting to teach mentality, not being the guy who, or, not just conforming to the exact psychological profile that exists for the average crypto investor. It's taking the market, looking at it from the point of view of a long-term institutional type investor. And I assure you, they aren't the ones who are, being tracked as short-term holders by Glassnode. Those are all retail for the most part. Now, there are a lot of day traders, and, if you look at the statistics, just go out there and, search statistics on what percentage of day traders are successful. The number is exceedingly low. And in cryptocurrency, that's it, the number of day traders that are successful, at least to the degree that long-term investors in crypto are, it's approaching none. Even your most successful day traders, the results that they are able to achieve pale in comparison to those that are taking, a longer term approach to the markets. That's kind of what I try and instill in people on the channel, is the fact that, you can't get emotional about the fact that we've come down $10,000 or 25%. This volatility is known. We all know it. We live in this volatility every day in this market. And it's understandable for a new investor to come in and be scared by it and be worried about it, and, to make mistakes because of it. But once you've been in the market for a while and you've seen how it is, you can't let things like this bother you. Even these drawbacks like we see here. It's why we talk about dollar cost averaging. And it's not buy every single dip that happens. You don't have to do that. But just taking an approach to dollar cost averaging, it all plays into the, approaching probabilities. When we're at $55,000-$60,000, dollar cost averaging, if you're going to do it, it should be an exceedingly small amount. But then once you get down to $45,000, well, now dollar cost averaging looks more attractive. And then when you're at $35,000, now it looks even more attractive. And that's like the whole thinking behind the model that I have. That's the entire point. It's just helping you give your mentality an algorithmic approach. It says that, as the price goes lower into these probability ranges, these are times where it's significantly more advantageous to you as a long-term investor to be acquiring the asset. But that's not if you're going to be worried if it goes down an additional 30%, because we're not acquiring it to sell it in, 2 or 3 months. We're acquiring it to sell it in, you know, potentially it could be 2 to 3 months, but we're acquiring it overall to sell it several years from now, because we want the price to appreciate. And we're simply doing it because we're not FOMOing all of our money in all at once. We're putting our money in a slow and measured way, and increasing the amount of money that we're putting in when the probability is favoring us rather than favoring the market. Overall, that's kind of the general thought that we take to the market. And when we look at this, you know, we're almost at a critical juncture here where we know that we're forming a double top pattern. So if the Fed comes out tomorrow and says, "Hey, we're raising interest rates and we're going to be, pursuing a more aggressive quantitative tightening policy," sure, then we could certainly see this become a true bona fide double top pattern with, extension well below this line, and perhaps a longer term bear market. But just because we're forming a double top pattern doesn't mean that that has to happen. In fact, there are several scenarios like we laid out where, if the Fed decides to continue to sort of kick the can down the road, so to speak, and deal with the problem at some point in the future, because it will be harmful to the economy if they try and deal with it right now, then we may continue to see, this price go up. So, like we say, it's all about assessing your probability of upside and your probability of downside. And, when you measure each of those, that is how you form a strategy towards approaching the market. So while we're sitting at $37,000, the price is significantly more favorable to us to be dollar cost averaging into the market for a long-term approach than it was several weeks ago. It's just obvious, but I say it's obvious. Nonetheless, we're seeing all of the on-chain metrics indicating to us you're seeing nothing but capitulation right now, and it's not from long-term holders who are capitulating. The long-term holders are acquiring right now. All of the on-chain metrics show this. It's the short-term holders, the less experienced individuals in the market, the people with less conviction towards cryptocurrency. They are the ones dumping their assets right now, and they are driving the price down. Long-term holders are slowly acquiring. I know, this is a long-winded discussion, but I really think it's important to approach the market with this mindset. Right now, a lot is going to ride on what the Fed says tomorrow. If they take a more dovish approach rather than a hawkish approach, we could very well see a trend reversal from the one that we've been seeing. So a lot is going to ride on that tomorrow at 2:30. So we'll be waiting to hear what they have to say there. So that's kind of how we're looking at the market right now, guys. There's a lot of things to consider at the moment, and this is why we say taking that approach where you're slowly investing into the market. And we've showed many times, we've done simulations where an individual dollar cost averages throughout the bear market, and we've showed, just simply put, how profitable something like that can be. And the reverse is true. If you're someone who's FOMOing in every time the price looks like it's starting to go up, the individuals influencing the market know that you're doing that too, and they're simply preying upon your mistakes that people make over and over and over again. So we're attempting to build a mentality where we remove a lot of the more emotional decisions that we make, and moving into a position where we're simply approaching the market through the lens of a long-term perspective, which really makes things much easier to do when you're not worrying about what's happening right now. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.